Good evening, friends. I hope you and your family are safe and well. Last it, it was the first lecture of SYBCom semester third. In that, we have discussed about the syllabus and paper pattern, and we already started the module. And name of the module was profit prior to incorporation. Now, friends, basically, profit prior to incorporation means those firms which are taken over by the company, and some firms which are acquired by the company. Firms in the future they become incorporated companies, and we have to understand the pre-incorporation period profit and post-incorporation period profit. How what will be the treatment that we have to understand first of all, we should find out the time ratio, then sales ratio, and we will allocate the expenses and income on the basis of time ratio and sales ratio. How we will allocate it, that we will study today's lecture. So today we will solve one simple sum, and it will be helpful to our profit prior to incorporation understanding. Now, friends, let us discuss about the new problem. First problem, it will be helpful to for our further study. So, new topic, new chapter, new problem, that is profit prior to incorporation. Problem number 1. TKT Limited was incorporated on 1st July 2019 to acquire the business from 1st April 2019. It commenced its business on 1st August 2019. Its profit and loss account for the year ending 31st March 2020 is as under. Particulars rupees, debit side office salaries 60,000, selling commission 78,000, carriage outward 42,250, rent and taxes 1,20,000, debenture interest 25,400, printing and stationery 15,000, advertising expenses 65,000, net profit 1,14,350. Credit side, gross profit brought down 5,20,000. Total of the both the side 5,20,000. Additional information. Number 1, sales for the pre-incorporation period was at the rate rupees 5 lakhs per month. Total sales for the year ended 31st March 2020 was rupees 65 lakhs. Prepare statement of profit and loss in the columnar form for the year ending 31st March 2020, allocating the various items on suitable basis in the pre-incorporation and post-incorporation period. Now friends, this is a particular sum that we are going to learn. They are provided various kinds of information. So TKT Limited was incorporated. Incorporate means registered on 1st July 2019. Now, and they says that you should prepare you should prepare. So you have to prepare the statement of profit and loss. Before preparing this, we have to understand our problem and some working we have to do. First of all, we should know about the three dates: date of acquisition, date of incorporation, and year end. These three dates are very important. Now, the dates, if you see that whenever we have to read our problem, we can understand the dates. Now, if you see the first reading, first sentence, TKT was incorporated on 1st July 2019. 1st July 2019, it is a date of incorporation. Date of incorporation. The date of incorporation that we have to put here, date of incorporation. After getting date of incorporation, we have to read the continue sentence what they are provided. To acquire, acquire means purchase, acquire means to take over, to buy the business from 1st April 2019. It means they acquire business, they acquire new business, some others firms they acquire. So date of acquisition 1st April 2019. So we will write here date of acquisition, that is 1st April 2019. After understanding the date, next date for the year ending, for the year ending 31st March 2020, and this is that it commences its business on 1st August. Business they started on 1st August, but year end is there 31st March 2020. So we will consider the year end 31st March 2020. So whenever we will start our problem, we should know about the only three dates: date of acquisition, date of incorporation, and year end. After that, if you see that the sequence, acquisition first, then second incorporation, and third year end, this a particular sequence is there. So acquisition, it's start from April, 1st April. So we will write here April, then May, June, July, August, September, and that basis we will put up to 31st March. See that acquisition day we will start, we will begin our months. Now from 1st April 2019, from 1st April 2019 to 1st July 2019, this particular period, acquisition to incorporation period, how many months are there? 1st April 2019 to 1st July 2019. So how many months are there? 1, 2, and 3. So this particular period is called as a pre-incorporation period. Then friends, date of incorporation to year end, 1st July 2019 to 31st March 2020. How many months are there? 1, 2, 3, that we have to count. 4, 5, 6, 7, 8, 9. So this particular period is called as a post-incorporation period. It means in pre-incorporation period, how many months are there? 3 months. And post-incorporation period, how many months are there? Only 9 months. 3 months and 9 months. Now we have to find out the ratio. 3 is table. 3 ones are 3, 3 threes are 9. It means our time ratio is 1:3. 3 ones are 3, 3 threes are 9. The time ratio is 1:3. I hope you understood how we will calculate time ratio. Now friends, we have to move further and we have to understand to calculate sales ratio. Again we have to consider about the whatever months are there, pre-incorporation period and post-incorporation period months, and we have to consider some information. This is that additional information, sales information, the spelling is for sales for pre-incorporation period was 5 lakhs per month, and total sale for the year ended 31st March 2020 was 65 lakhs. So here friends, pre-incorporation period per month sale is 5 lakhs they are provided. Per month sale they are provided 5 lakhs per month. Sales for pre-incorporation period was 5 lakhs per month. It means pre-incorporation sale 5,000, 5 lakhs, 5 lakhs, 5 lakhs, total is 15 lakhs. And then they says that total sale for the year means April 2019 to March 2020, total sale was 65 lakhs. So how much will be the sale of the post incorporation period? The post incorporation period sale is equal to total sales minus pre incorporation sales. Total sale, they says that 65 lakhs, pre incorporation period sale 15 lakhs, 65 lakhs minus 15 lakhs, it means 50 lakhs is a post incorporation sale. So we got these values: pre incorporation sale 15 lakhs, post incorporation sale 50 lakhs. Now we have to find out the sales ratio. Now how many zeros are there? 50, 50 cancel. Here also 50 cancel. So you will get 15. Here 50. Then we have to use the 5's table. 5 3s are 15 and 5 10s are 50. It means sales ratio is 3:10. So friends, we got the two ratios: time ratio and sales ratio. Time ratio, how we will get that you understood, and how we will get the sales ratio also. I hope you don't have any problem. Now let us discuss about our problem. Now one thing you have to keep in mind, whatever debit side items are there, that we will distribute it on sales ratio or time ratio. Office salary it is always distributed as per the time ratio. Selling commission related to the sales, therefore we will distribute as per sales ratio. Carriage outward, it is also distributed as per the sales ratio. Rent, time ratio. Debenture interest, it is directly put, it is a company item, it is not a pre-incorporation item, so it is directly put in our post-incorporation column. Printing and stationery, time ratio. Advertising expenses related to the sales, therefore we will consider sales ratio. Then gross profit also related to the sales, therefore we have to consider sales ratio. We will prepare statement of profit and loss. How we will prepare that we are going to discuss. Statement of profit and loss. A loss, it is a statement, it is not account of TKT Limited for the year ended 31st 3 2020. Then friends, we have to prepare the column. Vertical profit and loss account we will prepare, not a horizontal. Particulars, basis of allocation. Then next is calculation. Then after that we have to prepare the two columns, rupees pre and post incorporation. Now first of all, we have to write here income first. From the income we will deduct the expenses. So here initially, if you see that credit side only gross profit is there, this is one of the income. that we have to put here. Gross profit, we will allocate it on the basis of sales. Sales ratio is 3:10. How we will allocate? So here to gross profit value they are provided 5,20,000. So pre column we will allocate it only 3 and post column 10. So 5,20,000 into 3 divided by 13. 13 means total of this 3:10. So we will get, see that how we will calculate. Five lakh 20,000 into 3 divided by 13. So you will get 1,20,000. Then about the post column, 5,20,000 5,20,000 into 10 divided by 3. So you will get the value, it is 17 lakhs. How it is possible? 10 we have to remove, not a 10, divided by 13 that we have to do. So you will get the exact value. It is 4 lakhs. 1,20,000 pre-incorporation gross profit and post-incorporation profit is 4 lakhs. Then friends, there is no any other kind of income. There is no any other kind of income. Now we have to write the expenses. We have to deduct the expenses. Now there are various kinds of expenses are there. First is office salaries, selling commission, carriage outward, rent and taxes, debenture interest, printing and stationery, advertisement. These are all expenses we have to write here. And these all expenses we have to allocate it on the basis of office salary. It is allocated on the basis of time ratio. Time ratio is 1:3. And salary value they are provided 60,000. Salary value they are provided, so 60,000. How we will allocate? The pre column we will write 60,000 into 1 divided by 4, because 1 plus 3 is equal to 4. We have to divide the 4. In post column also 60,000, their ratio is into 3. 3 is the ratio, divided by 4. It means 45,000. This a calculation is there for post and pre. What about the sales selling commission? We will allocate it on the basis of sales ratio. Pre column and post column that we have to find out. The selling commission is 78,000. The 78,000 into 3 divided by 30. Into 3 divided by 30. It is 18,000. Friends, I hope you understood. Now next terms you have to find out.
मी स्कूलमध्ये आली.